Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Thursday, December 12th. We're going to take a look at Archer today. So our old buddy Archer won a Twitter poll that I put out, and so I figured I'd come and appease those folks and make a video here. Now we have a bunch of levels on the chart. I'm going to zoom in to sort of make it a little bit clearer, and then we'll talk about maybe where we go from here. So if we zoom into the intraday on the 10-minute, we see how the levels have been holding up. So if we go back a few days, back when it was in the upper 8s, it was wrestling with this 838 level. Right, mostly just back and forth, but predominantly hitting it on the resistance side of things. That gave way, caught some support here at 748 a few days ago, wrestled with 777 after it bounced off of that. But this is sort of what we see. We see it wrestling with a level, skipping one and catching support, and then wrestling with the level it skipped. And then what does it do here? Skips a level, catches support, wrestles with the level it skipped. And now today, it shot all the way up to 838 again. And that was in the pre-market. So if these candles are real, sometimes I question whether these Weeble candles are correct or not. But if we're led to believe that, it popped 4 cents over our 838 level and then zoomed back down through and continued or started wrestling with the 699 level, right? So that sort of psychological, are we really going to drop this below $7 level? And for the time being, at least, it tried to push off of that, came within 3 cents of the 748 level that we have in the chart, and now is coming down and trying to put in sort of a double bottom if we take into account this cluster of candles and then these couple of candles here. This could amount to at least an intraday double bottom. I don't know if this will have long-lasting effects because we're only on the 10-minute time frame here. So I don't think this is sort of a double bottom that would then have ripple effects for 2 weeks or something like that, right? This is zoomed into the intraday. But this is just to show how well these levels are holding up, and it looks like there's a lot of levels on the chart, but there really aren't if you take into account the percentage gap in between these things, right? The percentage gap between 699 and 748 is a lot, right? It takes a pretty significant bump in a percent to get from 699 to 748. But because Archer is covering so much ground, because it's so volatile lately, it makes it look like the chart is relatively cluttered. Now, if we come back out to the daily here, this is what we see. So again, it looks like there's a lot of levels, but it's just moving rapidly through so many phases of the price that it's hard to remove any of these, because look at how it's holding, right? Where it's hitting support and resistance, it's just lining up with these levels really strongly. So I'm reluctant to take them out. Now, if I'm an Archer bull, what I'm maybe wondering is we see this consolidation period here, and then this run up to 984, and then the steep sell-off, right? Dropped over 23% on the 2nd. That was 10 days ago. Found support here at this 645 and then worked off of it, right? So put in another swing. Wasn't able to get this high. It's okay. Put in a swing. And now, if I'm an Archer bull, I'm wondering if it can stop itself here with this candle today, right? And have that be the 699 support. And that holds. Do we get what in the vast scheme of things will end up to be a big run up, a pullback, and then another push and a bull flag and breakout? Maybe. That could happen. I could see that taking shape. Will it? I don't know. But, it's easy to get lost sort of in this, right? I feel like when you zoom out a little bit more, this starts to look like it's coming back toward this, which may be the case. But I think if you crop things into a range like this, it's possible. They're getting a secondary push and a bull flag, and it could take off again. The good thing is we'll know if this is going to be able to be considered a bull flag or not in just a few days, right? Either it just continues to break down tomorrow and it loses to 689, and then it's like, okay, yeah, 645 is too much in range, and then your biggest hope is it comes down here and double bottoms and then takes off. And so we should only be a few days away from knowing if this amounts to a bull flag, or if we are coming down here to maybe test a potential for a double bottom off of this swing, and then this repositioning here that's happening, the potential for a 645 double bottom. Now, if it does get legs again, you can see the levels here. There's a couple of them through 7. Gets really sticky around 838. We saw that here, right, where it wicked off of it, and then it wicked up through it, right? So it confirmed it, but then when it plummeted on that day over 23%, it fell right through it. But then it wicked off of it again here. So that 838 is really critical in my eyes if it does get legs again. 899, 943, and then 1040. I don't know if we charted above that. Yeah, we have an 1116 on the chart, and an 1182. Okay, so if it gets really jumpy really quickly, we've plotted a course up to 1182, sort of pulling out what I feel at least are the strongest levels. If it gets stuck within any of those ranges, then we can overdevelop them. But for now, I just sort of left goalposts out there, if you will. Now, if it continues to pull back, or if it resumes a pullback, however you want to look at it, 645, like I said, that's what we were just talking about, potential there, that things could ultimately end up double bottom and then take off. We'll see. If it gets leaky through 645, I have 603, 559, 524, 494, and then you see we have the plot. We have the course plotted all the way down to 337. So we're stretching from 337 all the way up into the 11s, and hopefully that covers enough ground that's needed for the foreseeable future. Now, let's see. I actually hadn't looked to see what the EMAs look like. So EMAs to me don't look that bad at the moment, right? All that's happening is you had this huge rush, and we have the gray 183 here. I always harp on about this 183 EMA. I think it's wildly important. You see it burst through there. It then transitioned all these short-term EMAs, the white 8, the peach 21, and the red 34 into a bullish formation, got all those to cross over the 183 EMA. And that's when we saw this rocket ship up toward $10. And now on this pullback, we're still way above the 183. Everything is still in a bullish formation. All that we're seeing is a wrestling with this 8 EMA at the moment, right? It dipped down through it. It repositioned itself above. Looked like it could have found support there, but it didn't. And so now it's back down through it. So all we're seeing is below, above, below. So this sort of like weaving, or what I often call wrestling. Now, even if it comes down a little bit more towards 666 as it's currently positioned anyway, that 21 EMA, if it finds support off of there and continues on its merry way, to me, that still would tend to lean me in the direction of there's more bullish momentum to be exhausted there. I don't know, but that's sort of the way in which I would lean if it does sort of stay where it is now, or just push off of that 21. At this point, we know it's not going to push off the 8, right? Because it's already below the 8, so that hope is dashed, right? That's the ideal situation. If it comes down here to the 34, not the end of the world, but I wouldn't feel as comfortable that there's, say, extensive bullish momentum left in the tank. And if it comes down to test the 34 and it doesn't go well, like it doesn't find solid support there, that's when it could really turn against the bulls and just get very, very bearish very quickly. Now, on the volume positioning side of things, it is sitting on some shelves here, but it has sort of, if we think of sort of these 3 maybe, especially these 2, it's left those behind. And if it leaves this shelf behind, things get really thin really quickly. Though they did get picked up here, in a recent swing. So, just to say, keep an eye and maybe see what happens on that front. Now, on the think or swim side of things, I feel like it looks way worse, but it's sort of like way worse in one way. Like if you're just paying attention to these ATR levels, right, it was so blasted above the November ATR levels. By the time it got into December, it was sort of comical. And so obviously it just couldn't sustain that level of gas in the tank, but it pulled down really hard. If you're just looking at the ATR levels, we'll talk about the channel in a moment. So ATR levels wise, just pinned well under the -1 ATR, which is 781, and then coming up into the ATR levels, it's only able to make it to the mid level between the put trigger and the -1 ATR. So finding resistance off of that and coming down into it. So that doesn't look great on this setup, but I think the Webull setup is more interesting than the Thinkorswim because things get so wacky when you get such an outsized move outside of the previous month's ATR levels. Now, if we look at just the channel setup, right, it's coming into the green wave cloud, so nothing tragic there. If it finds support here, even if it comes down and touches the blue mid-range of the channel, finds support there and continues to move off of it, that could end up being totally fine. And these ATR levels will just sort of sort themselves out come January, like we see they already are here. So that's sort of my consideration at the moment, but I'm gravitating much more toward this. And actually, if I wanted to think about simplifying things, I would even lean in toward this simple EMA setup. I think probably tells the bulk of the story. And if that feels better than this, which may feel more cluttered, totally fine. Though I do think this is incredibly helpful when you zoom in. If you are looking at this in an intraday perspective and making any decisions based off of that, this has been holding up really, really well, as you can see as we scroll left, right? So just depends on what you're doing with it. All right, folks, I hope that you've had a good trading week. And as always, I appreciate you watching, and I will see you in the next video.